The price of Bitcoin has been falling. In this video, we're going to dive down into the charts for Bitcoin, take a look at the data of Glassnode, and actually show you guys a bit of an opportunity that could be had here as the price of Bitcoin continues to fall. Guys, as we get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe. Tap the bell, select all notifications, and in doing so, you are going to be kept up to date with all the videos that we do here at Cheeky Crypto. Right, with all of that said, done, and out of the way, let's jump on down into the desktop and take a look at what is going on here with Bitcoin. Okay guys, so we're going to start things off with this hourly chart. As indicated in the intro to this video, the price of Bitcoin has been quite volatile. This is actually a bit of an opportunity to be had should you know what you're looking for. So in the data here for our hourly chart, I just wanted to highlight a couple of things. First of all, we have this very choppy kind of corrective action here. And as I just make this up, I'll make this a little bit bigger so we can see what's going on. We had this C wave high here. We found this upper resistance, a double top effectively, and which actually leads us down into a bit of an ABC. This actually C wave did overextend itself, and what we mean by this is we had this A wave down, we had a B wave up, and of course we had that C wave down slightly lower. Now I actually thought this was more of a flat correction initially this morning when I looked at this. I thought, okay, maybe this is our A wave, here's our B wave, and you know, we're still kind of waiting for that C wave to come in. Now this kind of pattern is still something that we could be looking at. This could be a zigzag here with a slight overextension on our B wave, but I don't tend to like that kind of approach too much. So I got to thinking and looking at this a little bit differently. Maybe this is an A and this is a B and this is a C, and then we had that progression to the upside as well. We have an A, a B, and a C, creating a bit of a double top, and then we are looking for some kind of downward action. And again, this didn't then line up. We don't have that next move to the upside. So I started then actually taking a look at this move here and thinking maybe this is not quite exactly what it seems. When we do have a smaller ABC here, and actually what we have is a slightly higher push here with this middle kind of A wave, a pullback with a wave B, and now we're up here with a completion of wave C. Then I kind of measured this one out and see if this actually fits slightly better, and we transposed that across here, and what do we have? We actually have a move that was actually over wicking the standard A to C, the kind of ratio, but it didn't go impulsive. We were looking for that break to the upside. We found that upper resistance right up here at that $38,188. Now, that area is actually really important, because if we actually zoom on out here and we actually take a look at this, we had our ABC that I said was a flat correction of a double bottom kind of creating a bull signal and a push to the upside, this area here. Again, it can happen where you have an A and a C kind of reaching that same level. It's not too uncommon, but you know, they're relatively rare. And then I got to thinking, well, what if this is actually just one big A wave down and this is actually a B wave up? Where would this area actually be on the charts, right? And this is where the opportunity really comes in. So what I'll do is we grab it from the upper end here, the beginning of our A wave, and we'll come down all the way to that low A wave just here. And what do we have? We actually come right up with a bounce to the 786. Okay, so now we know this. I can tidy this chart up a little bit. Okay, and we can remove some of these ABC moves because it's actually hindering us a little bit at this point. A lot of noise, but actually what do we have? We have this A wave down, we have a B wave up, and we'll be looking for a C wave down. Now, where does that C wave down actually take us? We take our fib and we run that across to that high point that we've just set, and we can see that this could be a $34,000 Bitcoin, okay? And this is the opportunity. Knowing that there's a big ABC move to the downside like this, once you actually reach that bottom, eventually what you end up with is a nice ABC up, and this is where the opportunity lies, buying at the bottom and then riding this up for a set amount of percentage points. Now, we don't know how high this is likely to go. This is something that we'd have to wait until we see the A wave, and then we can measure out where we think the end target is likely to be. And if we were to, I'm going to make some assumptions, I would have thought that they actually were going to be coming up into this kind of area of resistance right around here with this move. Obviously, the macro picture is still downside on Bitcoin. We are still looking to pull back quite a bit, so we are, you know, coming down into those low ranges just yet, unless of course this turns impulsive. And again, we can measure that and we can check that to make sure that, you know, if it goes impulsive, then actually we might reach our end goal here of our C waves on the larger time frames. That's kind of where we're trying to get down to. Once these ones have come in, and this is actually where we start to see some pretty good action to the top side, right? So basically we're looking for $31,000. we haven't got anything technically leading us there on the smaller time frames yet, but the bigger pictures, the daily and the weekly views, they are indicating $31,000. So when we actually take a look at the weekly or the hourly here, it's very possible that this goes impulsive down, effectively becoming a fourth wave up and a fifth wave, actually taking us into this range. But I don't think that's actually somewhere where we are just yet. We are looking at this, and we'll obviously have to measure that distance, and we can do this quite easily just by taking our A wave here. If I actually just delete that one off for a second and grab the right line. If we grab our A wave up and we move this over into our B wave, obviously we have our C target here. If we go down to 33,065 in the same move, that will basically effectively make this an impulsive, right? So I'll leave this up here for now with our $34,500 or $34,800 Bitcoin. But if we do actually come down into this line here, and I'll make this red so that we know that that is the impulsive trigger, then we look for that downside. We look for that going impulsive. We look for the fourth wave up and the fifth wave down. That actually might coincide with our C wave target here on our daily and our weekly charts. Okay, so for Bitcoin, we are still seeing a lot of volatility here. There's lots of noise, lots of kind of stuff going on here in the charts. Now, whether this B wave up higher has actually completed, we do not know just yet. The stochastic RSI is actually correcting quite nicely right now. So this actually could indicate a bigger push to the upside. As I said, it fell short of that impulsive move, right? And we are consolidating around this area. So this whole move can be invalidated if we actually go higher than that originating point of $39,000, right? So if we actually go higher than $39,000, then this whole move down is invalidated. Okay, so we want to be very aware of that. We want to be aware of where the invalidation points are, and we need to be aware of what actually triggers it as an impulsive move. So for now, Bitcoin, is looking like it's going to have to go down towards that $34,000 range, and obviously on the bigger pictures, it's $31,000. On the smaller time frame, on that hourly, if the price actually does move up to $39,000, then that actually invalidates this particular wave count, and we have to reassess what's going on there. But it doesn't mean that we are not going down to $31,000. We would have to push past $43,000 on the larger timeframes to actually invalidate those $31,000 targets that we have at those lower ranges. Okay, so really important that we understand what is going on with the smaller timeframes and of course those larger timeframes. Now, the other thing I really want to kind of do in this video, I'm going to try to keep it nice and brief, is that we need to go ahead and take a look at Glassnode, because there is some interesting things that have been going on with Glassnode, and I want to make sure that everyone's very, very aware of these. We've actually been creating our own set of reports for our Patreon members over in Discord as well, using Glassnode data, which I think is very important to keep everyone up to date with. So what do we have here? Well, this is obviously the personal favorite report, the net position change. We've seen more Bitcoin leaving exchanges yesterday. An additional 47,500 Bitcoin left the exchanges yesterday. So again, doesn't look like a bear market. Bear market scenarios, you see a lot more inflows, and we can just shoot back into late 2017 to know what a bear market looks like versus what a bull run looks like. Okay, so if I actually shoot this right back up into a little bit here, you can see what's been going on. When Bitcoin hit its peak in the previous bull run, there was a huge inflows. I mean, these inflows are absolutely massive, and there's a lot of them, right? Whereas where we are looking since May 2020 isn't bearish, right? It's not bear market for for crypto. And this is the thing that I don't think a lot of people really truly understand. Maybe it's they haven't actually experienced what a bear market is like from a previous all-time high into a bear market. Maybe they just started in the bear market, or maybe they actually entered late in 2021 or whatever. But this data, it is telling you exactly what to expect when it's a bear market. This is a reason that they call it a crypto winter. Projects absolutely die. They completely disappear, because they cannot survive that kind of sustained selling pressure. And what you actually see is a lot of inflows for Bitcoin. And what do you see in a bull run? You actually see the opposite of this. You actually see accumulation occurring, right? You see a lot more red than you do green, right? So just be very aware, guys, of what's actually going on here in this particular bull cycle. Yes, there's a little bit of green. That this was the May dump. Obviously, we set new all-time highs after that, which again doesn't happen in a bear market. You could call this a bearish phase. You can call it whatever you want. Just don't call it a bear market, because that isn't doing justice to what a bear market is actually like. And of course, we often talk about on this channel, It's the bear market that make your money, right? It's not the bull run that makes your money. It's the bear market. And it's very important that you get that, because when you're in the bear market, that is the time to really be diving into the market, accumulating heavily and building very, very strong positions. And when you're in a bull run, all you've really got to do is manage your emotions and make sure you're not, overstretching your targets, etc. So really important data going on here. And maybe just shoot back on in to, what's going on here. We see more Bitcoin leaving than is coming on. That's the net change difference on exchanges. Obviously, the other report that I really like comes under the supply section here. And if we come down to the hodl waves, this particular report basically is indicating to us, what is going on with people who are hodling, and what moves people are making, right? Are people that were holding Bitcoin now moving it and looking to sell it, or actually are they still hodling, right? Really important data. Now, as we hover above here, we obviously get the percentages and we can see day by day, what's going on. So we can compare, if whether or not there's, significant changes to the amount of percentage of Bitcoin held within a time period. And it's good to see that day on day, there's no change really that's actual of significance. And the waves are pretty consistent at this point. No major moves being had across the piece. So for the most part, what are we actually seeing? We're seeing a potential opportunity with Bitcoin going down towards $34,000, but we are looking out for that invalidation, which could come and it could invalidate that move. But if we do drop down to $34,000, I would be expecting, either to go impulsive, and we see that $31,000 opportunity come in to accumulate, or whether or not we actually go down to $34,000 and then bounce up, and $34,000 is the accumulation point, ready for a quick flip before going potentially down into the 31,000. Like I said, $31,000 is on the cards, unless of course we move higher than $43,000 beforehand. So really want to be kind of clear about that. The other things that we do know is that more and more Bitcoin consistently is leaving exchanges. So this is not, conclusive of what you would expect to see in bearish scenarios. This is the time for accumulation. Whales are accumulating, smart retail investors are accumulating, institutions are accumulating. Are you? Let me know in the comments below. And of course, it's good to know that there's still a lot of hodlers out there that are not being phased by this, and they are hodling strongly. No major changes there either. Guys, as we finish this video, if you found it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then do go ahead and subscribe, tap the bell, select all notifications, and in doing so, you are going to be kept up to date with all the videos that we do here at Cheeky Crypto. Right, with all that said, done, and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.